Hi, I am going to work a problem very similar to the problem you have in your homework in your textbook, problem 2-2A. Bergoma Bay's computer system generated the following trial balance on December 31st, 2015. The company's manager knows something is wrong with the trial balance because it does not show any balance for work in process inventory, but does show a balance for the factory overhead account. In addition, the accrued factory payroll, we're going to use the account factory payroll payable, has also not been recorded. So here we see a trial balance. Remember, a trial balance just shows every account and its current balance at the end of a period. And in this case, work in process is 0, but factory overhead has a balance. So we have a little problem here because the manager knows that there's work being done and there should be something in this account. So after examining various files, the manager identified the following 6 source documents that need to be processed to bring the accounting records up to date. Jobs 402 and 404 are the only units in process at year end, which means they're still a work in process. They're not done yet. The predetermined overhead rate is 200% of direct labor cost. So we have 2 jobs. Remember, jobs are tracked separately for costs. So anytime materials or labor is incurred on those jobs, they're going to have a separate materials requisition or time ticket. Then we're going to apply overhead to each one of these jobs at a rate of 200% for all the direct labor cost for each job. So our goal here is really just to record these 6 items. They had not been in the books yet. So the first journal entry I'm going to make is for direct materials. And here's 2 material recs, 21-3010 and 21-3011 for direct materials that were actually incurred on the job but not yet recorded. So my first entry will be a debit to work in process. That's how we show that direct labor, direct materials, or overhead is being applied to a job. We're going to put in a debit in work in process, and we're going to credit raw materials, and that's how we show raw materials are being used or how they go down. So I have 2 material requisitions here for direct materials. Notice the third one is indirect, and I just want to deal with the direct right now because that goes directly into work in process. So the sum of these two, $28,800, the sum of these 2 items, I'm going to move out of material inventory into work in process because that's what the material requisition told us to do. It said take the materials out of raw materials that are going to be used on a job. So I will record the $28,800. Again, work in process means the materials are going into a job and the material is coming out of the raw material inventory. This is to record direct materials in production. I'm going to go to the next step in this problem, which asks me to record the direct labor. And so I'm going to look here at the 3 labor items, the labor time tickets, and look for the 2 that are direct. And I see them right here. Labor time ticket 6052 and 6053. These 2 items are the only 2 direct labor items. So I'm going to use the sum of these 2 to move the direct labor into work in process. That's how I'm going to show that it is being used right into production for these jobs. And I will be using the factory payroll payable to show that it'll be paid later because sometimes they just don't get paid right away. Usually paychecks come every 2 weeks. So I'll record that they will be paid later and the fact that these 2 jobs are in process and that labor has been applied directly to those jobs. So the sum of those 2, the $59,800, the sum of those 2 items, I will show that the labor has increased in work in process and the fact that they'll get paid later. This is actually an increase too. This is to record direct labor in production. I only had 2 of those items. I only had 2 time tickets showing direct labor in production for our jobs. The third piece of any work in process account, after we've done direct materials, direct labor, is overhead. Those three things are the manufacturing cost. So we've done two already. We took care of those two direct materials, the direct labor, and now we're going to apply overhead into the work in process account. Overhead is applied at 200% of direct labor. So remember, if we look back over here at our direct labor, we said that we had $59,800 in total direct labor. Our POHR, the predetermined overhead rate, is 200%. So the amount of overhead that we will apply is $119,600. That brings me to transaction C. I'm going to increase the work in process inventory account by the amount of overhead that we are going to apply, the applied overhead, $119,600. That is 200% of direct labor, based entirely by what we are told in the problem. Predetermined overhead rate is 200% of direct labor cost. 200% of direct labor cost down here. You might have the tendency to want to come back up here in your trial balance and use amounts, but we're really only focused on the 6 source documents that need to be processed. That's what we're missing, so we're really only concerned with these 6 items. The next thing I'm going to do is record indirect material. Requisition 21-3012 for $5,600 has not yet been recorded. Any indirect material goes into overhead. This is a fundamental vocabulary word you need to understand. Direct items go into work in process. Indirect go into overhead. Overhead captures all of the indirect cost for a job. The amount of raw materials that were used indirectly is the amount from that requisition we just saw. $5,600 indirect. Indirect goes straight into factory overhead. Keep a note, this is actual overhead. This is the actual amount of materials that were indirect, as opposed to transaction C, where we had applied overhead through an estimated number. Applied and actual. And finally, we're going to show the labor that was indirect, also going into the overhead account, $8,200. That finishes the journal entries. The next thing we need to do is figure out our new balances for each one of our accounts. The cash account from the trial balance did not change. The journal entries we just did not affect it. Accounts receivable was also not affected. Raw materials had a change though. I'm going to use some T accounts to help us understand the effect. In the raw materials account, we started with $80,000. Over the course of all the journal entries we just did, we made a credit for $28,800, and we also made a credit for $5,600. Those credits were for the amount of material used. They represent the material requisitions. And now I'll solve for my balance. A positive 80,000 less what was used gives me a new balance of $45,600. I'll do another one. Let's look at the next account on our trial balance, work in process. And we know this one was already messed up because it had a 0 to begin with. Work in process account started with 0. Over the course of our journal entries, we had a debit of $28,800 for our direct materials, a debit for $59,800 for direct labor, and then the factory overhead that we applied of $119,600. If I added those totals up, I'd get a new balance of $208,200. When it comes time to enter these amounts in the trial balance, these are the new balances. Raw materials would have the new balance based on the journal entries, and the same with work in process. You would need to do that with all of the other accounts listed that were affected by our journal entries. That would include factory overhead and also any wages or factory payroll payable count that was applied for wages. You may want to return back to your financial accounting book to review income statements and balance sheets, but you can also find some examples on page 15, 17, 18, and 19 of your current textbook. You will be asked to use your trial balances to complete statements.